Hi there, welcome to Kneppyinvest. In my opinion, it's very important for investors to have a list of rules, a set of rules that they do follow in determining companies they buy, companies they sell. Now, a few of my rules have to do with announcements a company releases. For instance, I will much more likely buy into a company that releases a profit upgrade over a profit downgrade. And one of my rules has to do with don't buying into companies that release a profit downgrade. That is a bad sign of how the company is performing, and there could be further bad news down the line. But on occasion in the past, I have bought into companies whose share price have decreased by 50% in one day on the back of some bad news. Not always profit downgrades. But on the 6th of May, we saw Atomos share price decrease by 50% on the back of a profit downgrade. So based off my rules, I should not have bought shares in this company. But towards the end of the day, I thought I do see really good value. The market cap of this company dropped to about 65 to 70 million. They are profitable and will be profitable in the future. They will be able to generate cash flow. So I saw some value at the share price of 30 cents. So I decided to take a small position in this company. Is this a foolish trade? Should I have followed absolutely my rules? And going against my rules, is that a foolish decision? I think we'll have to wait maybe a few months, maybe a few years to ultimately decide whether this was a foolish trade. I'm always willing to go against my rules on occasion, not all the time, and it is rare that I will do that. So this is one of those instances where I did go against my rule. So I'm going to follow the fortunes of Atomos moving forward because I do think there is potential they will be facing some headwinds in the future. If you don't know what Atomos does, they create tools, creation tools for video professionals and digital content creators. They've been around since 2010, and those tools are like professional monitor recorders, stuff like that. And I think those sort of products in an economic downturn will be set aside or delayed. So I do think that's one of the reasons why Atomos could be facing some headwinds in the future, particularly if we do see an economic downturn. And this could be the first sign of that. But ultimately, I did see some really good value at 30 cents. And funnily enough, the COVID-19 low for Atomos was 25.5 cents. And the low on Monday or Friday, the 6th of May, was actually about 25.5 cents. So this was sort of a possible double bottom. That's another reason why I decided to take a position in this company. And potentially it was a foolish decision, a foolish trade. It was not that long ago that I did a video, not dedicated video to Atomos, but the CEO did resign or was fired, Estelle McGetchie. And one of the reasons she was let go or resigned was because she refused to move to Melbourne. And the company always required the CEO to be based in Melbourne. Now, in this announcement, this change of CEO announcement, and the share price suffered, I think fell by about 18 or 20%. The company reconfirmed their financial year 22 guidance of revenue exceeding 95 million and EBITDA margins between 12 and 15%. So just keep in mind that's guidance for financial year 22 when we look at the profit downgrade. Those are two big numbers, the revenue guidance and the EBITDA margin guidance. One thing I really like to do for any company is just look at the overall sentiment in the market around that company. And this is the share price of Atomos going back to just prior to the COVID-19 financial panic. So just prior to that, the share price was, I think, got as high as maybe $2. And during the peak, or the depths, if you will, of the COVID-19 financial panic, share price of this company fell all the way to 25 cents for a very brief period of time in only one day. But there was actually a fair bit of positive sentiment around this company in 2021. We did see share price rise and was in a really good uptrend. In fact, the share price rose all the way to a high of about $1.80. But sentiment in this company has shifted since about September, October of last year, and we have seen the share price really turn into a downtrend. So if you're just listening to the market, you probably would not have been a shareholder of this company because the share price was in a well-defined downtrend, some negative sentiment around this company, and the share price just kept on falling. The release of that announcement in regards to the CEO leaving the company because she refused to move to Melbourne saw the share price drop about 18 to 20% and actually kept on falling after the release of that announcement, all the way down to about 65 cents before the release of the profit downgrade on the 6th of May. One thing I'm always looking for this time of year is trading updates. We are in confession season when management of companies are becoming aware of how their company is performing, and we're seeing a flurry of these trading updates, profit upgrades, profit downgrades. I'm looking particularly for profit upgrades, even for profit downgrades, particularly of those companies I own, and particularly when the market punishes any company on a profit downgrade. And sometimes you will see the market completely overact. And that's the thing I am looking for here. So even though I will focus on profit upgrades, I'm looking for market overreaction when a company releases a profit downgrade. It is a risky decision to take a position in a company that has just released a profit downgrade, because they do say profit downgrades comes in threes. When they released that CEO announcement, they reconfirmed the financial year 22 guidance, which they gave in the half-year results on the 15th of February. So again, keep this in mind. Revenue is expected to be more than 95 million, growing up or rising 21% from financial year 21. And EBITDA margins are expected to be between 12 and 15%. So those are two big numbers. The revenue, 95 million, EBITDA margins between 12 and 15%. They reconfirmed this guidance in the middle of April when the CEO left the company. And here is the trading update, and it is a downgrade. So when you did see the heading in the ComSec or whatever system you do use to view ASX announcement, had no mention of how it trended. The trading update, was it a downgrade, was it an upgrade? You had to actually go into the trading update itself. And the first highlight point is the most important point of this announcement. So they start off actually being a little bit positive. Demand for existing and recently released cloud-enabled products provides a strong medium-term outlook. So that's a nice little positive spin before they get to the bad news. However, financial year 22 revenue is now expected to be between 80 and 90 million. So remember, they reconfirmed the guidance only a few weeks before this of $95+ million in revenue. And remember, the EBITDA margins EBITDA margins were expected to be between 12 and 15%. Now they expect EBITDA margins to be between 6 and 8%. That is a significant downgrade, particularly when they reconfirmed the guidance only a few weeks prior to this. So this is one of the reasons why the market punished Atomos and the share price fell about 50% on the day. Now, what also helped the share price fall 50% is overall general weakness in the market. On this particular day, most of the ASX indices fell between about 2 and even 2.9%. I think the XSO, which is the small cap index, fell 2.9%. So one of the worst timed profit downgrades you can do. You don't really want to release a profit downgrade when there's overall general negative sentiment in the market. That's exactly what Atomos did. Now, it is a bit of a bummer that Atomos decided to release this announcement on possibly one of the worst days of the year when overall negative sentiment in the market, but they really had no choice. As soon as they knew that the guidance was under threat and more than likely would not meet guidance, they did have to release that information as soon as possible. They couldn't delay it a few days or maybe a week because they probably would suffer serious consequences if someone did find out about that. It's really interesting to look at their excuses because something just doesn't jive here. For instance, one of the reasons why they're not going to meet their guidance was slower than expected sales occurring in the first 4 months of the year due to a change in marketing approach and lower promotional activity. This approach was corrected mid-April and promotional activity has been reinstated. So the very fact that this problem was corrected mid-April when the management of this company reconfirmed their guidance is telling me there is some sort of miscommunication between those who know how the company is performing and the management up the top. And eventually, that there were problems with this lower than expected sales, actually eventually did reach the top, but it did take a while. But thankfully, it has been corrected and promotional activity has been reinstated. One of the other reasons they gave for the company not meeting guidance was the recently initiated COVID lockdowns in Shanghai, possibly affecting or impacting the short-term production schedule for a new Connect product, and is factored into the revised guidance. So if that doesn't have as much of the impact as they expect, maybe they'll get closer to their original guidance. That is a possible scenario as well. And this is how the market reacted to Atomos news that they were not going to meet their original guidance. Share price down 49% at the close. I bought in at 30 cents a few minutes before closing auction. Share price went to a low of about 25.5 cents in the first maybe 10 to 15 minutes of trading. Share price actually rose back to about 36 cents and then fell during the second half of the day. So I actually was happy taking a position in this company at 30 cents, particularly if they actually can beat the revised guidance. I think that will be a good look. So hopefully they are being a little bit conservative. There were hints in the commentary that they are taking into account a few things that, if they do turn positive, will actually be beneficial for the company. So hopefully that happens as a shareholder right now. And I do think this wasn't overreaction from the market. The market cap valuation of this company now is at pretty good levels, around about 60 to 70 million. And I will always take that for a company that I do think is going to grow over the next 5 to 10 years. Now, although Atomos have released a profit downgrade, it's a profit downgrade in relation to expectations, not a profit downgrade when you compare it to the previous year. So if you go back to financial year 21 results, which were released in August of last year, when there was some good positive sentiment around this company, you note that Atomos's revenue was 78.6 million, up 77% from the previous corresponding period. So even though they have issued a downgrade and now they're expecting revenue to be between 80 and 90 million, it's still higher than last year. So Atomos is still growing. The other thing to note here is they didn't really give an EBITDA margin for financial year 21. They just noted that EBITDA margins were trending towards 12 to 15%. So that's one of the reasons why the market punished was EBITDA margins were significantly lower than expected. And they just didn't like the fact that revenue, even though it's going to be higher than last year, was not going to be as high as expectations. Now let's have a look at Atomos's chart, and this is their weekly chart going back from when they listed on the ASX way back in 2018. It's a funny looking chart and it goes up and down in cycles, it seems. So a really good trading stock, I think, right now, if you look at this. So it trades up, it trades down, trades up, it trades down. And right now, share price is at an almost all-time low. Share price did get down to about 25 cents during the COVID-19 financial panic, and the low on the 6th of May was about 25.5 cents. So a possible low-risk entry point right now. So that's the other way I looked at this, is the share price is at an all-time low or very near an all-time low. And if everything goes right, if they do meet their guidance or even exceed their guidance, their revised guidance, I think that would shift sentiment to positive in regards to this company. And maybe the share price will increase from here and approach their all-time high, which is around about $1.80, which is 6 times current share prices. That's all I have for this video on Atomos and the profit downgrade. If you think I am a fool for taking a position in Atomos at 30 cents, going against my rules I have in place to totally avoid these sort of situations, I'd love to hear your opinion. If you think I made the right decision by taking a position in this company at 30 cents because you think there is some good value here, I also love to hear your opinion. Otherwise, I'm not a financial advisor. Even though I have taken a position in this company at 30 cents, doesn't mean you have to. So if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.